When the stock market sells off, I don't like to swing trade short. I'll day trade short at a heartbeat, but for swing trades, I still like to just be directionally long. And the way I do that is trade instruments like I'm currently long in VXX, and I'll teach you some strategies this morning to get you thinking about how to potentially capitalize in a big way when the stock market sells off. Hope that y'all are doing well and that the markets are treating you kindly. It's a smart time to consider going to cash if you're in any long-term swing trades or long-term position trades because of the market weakness. Not quite time to go all cash, but a good time to start lightening up on position. So, hello active traders, and welcome to this week's broadcast of Trading Week Ahead. I'm Ken Calhoun, your host, and the markets have been taking the mother of all sell-off. Crash and burn. Bad news bears in charge. Stop the madness. There's got to be a better way. Well, what are we going to do as traders? How are you going to profit from it? How are you going to not screw up and lose your money? Inquiring minds want to know, including me. Well, anyway, as always, all information is for educational use only. I'm not making advice about what to buy, sell, or hold. And by watching this, you agree not to make actual trades. It's all for learning in a safe demo account or learning use environment only. Also, I wanted to thank all of you for making these, to the best of my knowledge, at least the #1 most popular trading webinars in the industry. Here's an example of a few real trades I made on the 30th, just a couple of days ago. When was that? That was Tuesday, looks like. Anyway, I bought a little bit of speculative Twitter and GoPro because they were going up despite the market weakness. But the main plays, and again, this is only, what, $3,000 worth of trades. Little tiny, you walk before you can run. I put on small initial trades in case the market rallies back up and these guys get stopped out. It's not going to bite me in the ass because it's not going to bite me in the ass. Boom. Because you don't want to get stuck with big trades going against you. So I'm long 60 shares, 20 shares, 63, 60 shares, just $600, $700, $800 each. And most of these guys, all told, around $3,000. I threw a touchdown pass into the market. Let's see if it hits the end zone and gives me my 6 points. Anyway, so I'm in long correctly before the big market sell-off because I know how to trade, right? I'm in, but real small size. I illustrate. I don't just teach this stuff. I actually trade it. Anyway, I'm in itty-bitty shares, $600 worth of VXX. $750 worth of UVXY, $399 worth of TVIX. And this is my Fidelity account. These are actual real money trades I did back on the 30th. And they're for longer term swings. So you might want to consider that. Let's take a quick look. Let's take a quick look at our stock market and the charts and what the heck they're telling us. Let's start off with our S&P. Okay. The S&P, the price that proves the S&P long was hit yesterday because we lost 15-day support. If we look at the 90-day daily candlestick chart, again, I apologize with so many of you here, I'm not able to answer questions. I do answer questions generously in my paid member events only. So if you're a paid member at Swing Scans, in the Swing Scans broadcast, or in my live trading room at tradingtheopen.com. So many hundreds of traders participate in my events as premium. You may want to ask questions during those events, but forgive me for not being able to answer because of the big turnout today. Anyway, yesterday we dropped. Last week I said to go short the market if we lost 28.17, which hit right here. So I was correct in my short call in the market. That was the S1. Where's our R1 and S1 for the next week? I'm glad you asked. R1 is up at 28.44, and the reason is I want us to get above all three of these congestion sell-off candles here. So if we get back up to 28.44, game on, party on. We go tailgate this guy and see if we get back up to new highs. But in the meantime, abandon all hope. You enter here. The market's in the mother of all sell-off rounds. So our short trigger is 27.42. Any of you institutional clients or professional Wall Street guys, you know how good my calls are, right? Like I said, I called it last week. I nailed it, 28.17. Let's zoom in with our action cam. I said to go short the market back on our broadcast here if we lost 28.17 support, which activated Wednesday right there. That's where my Saturday call last week said to go short the market or sell off any open longs. That was exactly correct. 28.17 would have been a great place to short the market. Boom! Flawless victory. He shoots, he scores, the crowd goes wild. So 27.42 is our short trigger. We're going to go short the market, especially short if we lose and hold under the 50 SMA. Okay. Big picture strategically though, note please that every single time during the last year the S&P has lost the 50 SMA, that has not been enough to keep the bulls, the longs, from coming back in and buying it up. So past history from a professional trading standpoint, you got my word on it, it's really important you understand previous chart patterns and previous volatility profiles are the most likely predictor of upcoming volatility. So for that reason, even if the S&P does lose the 50 SMA, I'm not going heavy short the market. I'm going to wait till, and it's a good professional tip too for any of you pro traders, I'm going to wait until the S&P loses your 100 simple moving average before heavily shorting or heavily going long the inverses, right? So if and only if the S&P loses 2640 will I aggressively short it. I'm doing some tentative initial and a feeler spot pilot trades right now in the inverse ETFs because they're going up. For example, here's VXX. I started to buy in back here. I'm starting to scale into it, but I'm not going to aggressively long until we get over the 200 SMA in VXX. Now this has huge upside potential if the stock market sells off. I expect the biggest money that I will make in my Fidelity account and my Interactive Brokers and my Ameritrade accounts are all going to be going long the inverses on any spike up as they have been doing lately if the stock market drops. And I will be walking my traders through that in swing scans and trading the open, my members only, with specific calls. Like we got, I think it's 4 or 5 inverse ETF calls for my swing scans members that they'll be learning about in 22 minutes. So if you're not a swing scans member, you might want to change that and join. Anyway, the trick is wait until over 200. Don't jump the gun with size. I got in a little bit on speculative longs, but they're little itty bitty baby trades, right? So that's how you trade professionally, is take lots of shots at small size trades. So, you know, when you're in these guys, it's only, you know, a few $1,000 total. Back when the market did its flash crash, I was long 20 grand plus. I was you could see my thread at the tradingtalk.com forum that I run on why I bet $20,000 and won against Wall Street by going long these guys during the last time it sold off. So anyway, do be aware of these types of potential trade setups. Okay. Our trading heroes of the week. We have got, from my Swing Scans member, Mark F. He made a great comment last week in Swing Scans. And we'll have more charts to come in just a minute, but I just want to quickly acknowledge my trading heroes of the week. And they're updated each week with people who ask especially intelligent questions or contribute in a meaningful way to our Swing Scans members webinars or Trading Open live trading room webinars. So,
great job, Ken. You were amazing. Hi traders, we hope you liked this trade mastery video with Ken. Go ahead and subscribe to Ken's YouTube channel and post your comment or question in the area below. Thanks for watching and good trading!